And good evening. We are doing it live right here. Mottek On Money, 790 KABC. 5 o'clock hour in Los Angeles. Yabba Dabba Do time here. Mottek On Money, 5 nights a week for you, live on the air on 790 KABC. Streaming live online worldwide at KBC.com, and you're on demand. Mottek On Money podcast at KBC.com, Apple, iTunes, and all your favorite podcast platforms. What's up, you ask? Well, nothing but the rent. It's usually the right answer here in Southern California. Well, that's up, and some other things are up, too, based on the latest reading on inflation today. Meanwhile, stocks have closed at a new high for the year. Investors awaiting the Fed's big interest rate hike or rate not hike tomorrow announcement. I hope the latest inflation report doesn't impact the optimism around rate cuts that's been fueling the stock market rally lately. The Dow coming in for a closing gain of 173 points today. Its third highest close in history at 36,578, and it's just about 0.5% below its all-time high hit back on January 4th of 2022. The S&P 500 moved up 21 points, and the Nasdaq gained 101 points. Stocks reaching new highs for the year following the inflation report out today that was mostly in line with Wall Street expectations, although slightly hotter than some analysts had expected. Month over month, the cost of living increased by 0.1%, coming in slightly higher than expectations for no monthly increase. Looks like inflation eased to 3.1% from 3.2% over the past year. That pretty much was in line with analysts' expectations. The so-called core inflation rate after taking out food and energy prices up 0.3% month over month and stayed unchanged over the year, also in line with analysts' expectations. Now, we have that big Fed meeting tomorrow, and it's widely expected based on the Fed funds futures. They're eyeing a rate cut in May instead of March. The chance of a quarter-point cut in May climbed to 50%, up from 40% a week ago. So we'll see what's going to happen tomorrow, whether the Fed will hold the line. It's not widely expected they're going to be cutting rates tomorrow, but we're going to talk about that in just a moment. Meanwhile, the market's on a 6-week winning streak and hitting a new high point for the year today. Macy's stock down 7.3% today after Citi downgraded that stock to sell from neutral, following a report that an investor group wants to take Macy's private at $21 a share. Stock pulling back after ending Monday's session up nearly 20% following that buyout report, with people talking to the Wall Street Journal saying that Ark House Management and Brigade Capital Management have submitted a nearly $6 million bid for the Macy's stock that they don't already own. Looks like $6 billion bid for the Macy's stock they don't already own. Macy's and Ark House Management declined to comment when contacted by MarketWatch, which is the source of this latest report. Taking a look at what's happening in the Middle East, we are following what's happening there closely, including the latest attack. Yemen's Houthi militants claiming an attack against a Norwegian tanker days after the group pledged to target Israel-bound ships of any nationality. In the meantime, we're seeing the price of oil pull back today, down nearly $3 at 68 and change. Ahead of the Fed meeting tomorrow, we saw benchmark bond yields pull back, impacting fixed-rate mortgage rates. What's the outlook for rates and real estate as we head into the new year? I'll talk about that tonight with Fred Solomon, president of Solomon Financial Mortgage and Realty. How are your tax dollars being spent here in California? More of it going to the so-called train to nowhere. Meanwhile, the effort to repair and repeal, that is, the so-called death tax in California continues. We'll get an update on all that tonight from Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Monday nights right here on 790 KABC. But first, on your money, the markets, the economy, the Fed meeting tomorrow, gold, crypto, and the whole works. Joining us live now, money manager Ken WINANS, president, WINANS Investments, market historian, author of Investment Atlas 1 and 2, Forbes magazine contributor, and, of course, longtime contributor to this program, which we greatly appreciate. Ken, happy holidays to you and everybody there. Ken, thank you very much for taking the call here tonight. And here we are at a new high for the year, just shy of the all-time high. Give us your view of this latest market rally, first of all.
Frank, the Santa Claus rally, as we would call it, is alive and well. And the really good news about it is after what had been really a very tough couple of years for everybody, especially investors, people seem to be better in spirits. As I talk to longtime investors, they're more willing to move money out of money market accounts and look for opportunities. And I haven't had those discussions in quite a while. It's gone from looking for opportunities from fear. And you need to have that if you're going to have the markets move higher from here. And I mean, that certainly is a positive. I would also say that what you talked today about the inflation numbers, Yes, they might have been in line, but people were concerned that inflation was going to be stubbornly high, and to have it come in the threes and not the fours really does give people an area of comfort, especially anybody trying to gauge, what's going on with mortgage rates, what's going on with borrowing rates for companies. Banks are going to begin to, certainly loosen their purse strings more and more and willing to lend out. So it's generally a good thing. And then last but not least, when we talk about the month of December, the one thing I would tell everybody is that really from this week on, you might have some prices move higher, but you're going to notice that the volume levels of the market are going to gradually drop down, whether it's because of Hanukkah, whether it's because of just holiday season, because we basically have 2 weeks that will not be full weeks. So, again, don't be surprised if you can't get a hold of your investment advisor who's out enjoying themselves a bit. So any position changes you want to make, I would recommend doing it this week. Don't try to get it done next week.
All right, we're going to get that big decision tomorrow, a big statement from the Federal Reserve, full-blown news conference from Fed Chairman Jerome Powell, who last time he spoke tried to tamp down expectations that they're done raising rates and tried to pull the punch bowl away for a while there. What do you think is going to happen tomorrow?
Well, I think it's going to be more of the same language. The Fed's going to try to be very, very consistent, really, between now and going into the election cycle next year. They don't want to be accused of moving things around. I think it's safe to say that rate increases are going to be done for a while. The speculation about rate drops, the only thing I would say about it, if you go back historically and look, rates are pretty much at a historical normal level. I know for a lot of younger listeners, that might be a shock to hear that. But go talk to their parents and grandparents about what borrowing costs were. Even in good times in the 1980s, it was higher than it is now. So if they drop it, Frank, to be honest with you, I don't think it's going to be a really large drop because we really don't want a large drop. Large drop means we're in a serious recession and bad things are going to happen. I think, just things normalizing from here, people getting used to these rates. And then more important than all of that, rate increases rate levels are one thing. It's the availability of credit is what we care about. And that is lending institutions willing to lend money out to qualified borrowers. That's what we want to hear more and more of. And I think that tomorrow's conversation, so to speak, or statements are going to be one of stability. And that's really what we want ending out the year.
All right, back to the inflation numbers. Taking out food and gas, the so-called core rate of inflation that was considered sticky last month, and the main reason for that is shelter prices, the biggest expense for most people out there. Rents up 0.5% month over month and up 6.9% over the past year, and probably even higher here in the Los Angeles area, given the affordability crisis here, along with the homeless crisis. What about the latest reading on inflation, especially on housing here?
Well, that's the thing about the inflation data, and I always get very concerned. There's no one single magic number. And then also when you say that, realize that it's different region to region, state to state, and I might dare say even community to community. It depends on policies and how things go. What I can tell you that I'm noticing is that I think that the commodity markets are giving a telltale sign that we're going to see building expanding next year. I am looking at copper prices. I'm looking at lumber prices are beginning to firm up. Anything involving construction, at least the early telltale signs are you're going to see that beginning to pick up. And again, supply and demand. We know we need to build new apartment buildings. We know we need to build condos and houses and all those kind of things. And I think, and I'll talk later in a moment about the home builders and the REITs, but I think that those are the areas with interest rates normalizing and stable. Now those kind of companies can make calculated decisions on where they want to deploy money and how much of it they want to do at a single period of time. But again, Frank, one final point. I know that we all want inflation to be over. Even Jerome Powell said several statements ago, it's not going to be down in their target until 2025. It doesn't disappear fast. And so we just have to hope that the trend continues to be down, but it's certainly not going to be over for any period of time in the foreseeable future. And that's just something we all have to learn to live with, unfortunately.
Of course, we're watching nervously what's happening in the Middle East and elsewhere. And one thing that may come as a surprise, the price of oil continues to plunge here. and down more than nearly $3 today at 68 and change, despite the military action there in the Middle East, including attacks on U.S. installations in the region. What about the price of oil here, Ken?
A big part of it is seasonality. I mean, when you're in the wintertime, people just are not vacationing. They're not traveling. Outside of the holiday season with the airlines, even after that, I mean, when you go into January, I would expect the prices of crude oil to maybe even be softer going in after we're post-holiday. So it's actually a blessing that, number one, that this terrible conflict is happening at this time of year, and number two, and something that rarely people are talking about, the dollar's actually holding up really, really well in spite of all the talk about the debt levels and certainly what's going on in this country. The dollar is the least stinky thing in the hamper when you look at currencies around the world, and people are gravitating toward it. It's yet another reason why stocks are doing as well as they are. I can actually make the case that U.S.-backed assets are attracting money from around the world because it is safer to be here than in many other places. But I would just simply say that, one, I don't think anybody believes that oil is going to stay in the 60s for very long, especially going in the springtime. And that can have this effect on inflation going forward that gives you kind of a ping-pong effect, and we don't want that. But the geopolitical issues are alive and well, and at some point in time, if you have restraints in capacity, it will make prices go up in the United States. So we're a long way from it being over.
All right. It is the holiday season, and looks like somebody might be shopping for Macy's, according to the Wall Street Journal. What about that report, and what about the retailers right in the midst here of the holiday shopping season?
It's interesting when I listen to the retail or read the retail reports, and you certainly listen to what management's talking about. I would just put it as surprised. I think it goes back to what you and I might have talked about a couple months ago, Frank, that I think people are looking for a reason to celebrate and to be in a good spirit. And yes, they have credit card debt and they're uncertain about things, but people just want to try to enjoy the holiday season. And the retailers are clearly saying that in spite of the shoplift.
Welcome to Talkville, the ultimate Smallville rewatch podcast. Title Crisis aired March 3rd, 2004. Director Kenneth Biller. He was a weird guy. He was talented and I liked him, but he was a weird fella.
The production loved him. The cast, Ken, if you're out there, I'm sure we get along.
A lot of these people, I don't want to call them pawns, but in a TV production, even directors are a lot of times pawns.
Jump in now or catch up on any of the past seasons of Talkville on YouTube or wherever you listen.
Problems that we all know very much about, and certainly, the cost of labor, the cost of inventories, and in spite of all that, they are basically finding that there are people coming to those stores and certainly within the shopping centers to socialize and to buy things. So, and this is brick and mortar. This is not on Amazon. So I think that we're going to find that the retailers in general are going to have a decent holiday season, and we'll find those numbers as they come out in January and February. But at the most part, it's a very positive event. I think Macy's has been ping-ponged around. I can remember distinctly 3 or 4 times when Macy's has changed ownership. It's one of those brands that people know well. Certainly, we watch the Thanksgiving Day Parade, and we know Macy's very well. But the one problem that Macy's has, and you keep hearing about it over and over again, is that they have too many stores, and they're trying to decide what stores to keep and which stores not to keep and make that brand marquee again in a few very distinct locations. And it wouldn't surprise me if that's what this group is going to try to do if they do, in fact, purchase it.
They used to say if you want to feel good, go to a store and not even look at the price. Like the 99-cent only store used to be, but that has changed now. Ken, what about on the lower end, the Dollar Generals, and where would you place your bets on the lower end or the higher end right now?
Oh, that's a tough one. I would say that, one, I know that the medium end has been having a tough time finding its identity. I mean, we've heard about what goes on with Kohl's and Target and some of these other places. But again, almost across the board, whatever people's, price ranges on buying stuff, all of them are talking about, increased, people coming into their stores, more sales, and it's not necessarily gravitating towards sales, or certainly by items being given away for free. What you do also find is more clever marketing. And what you're finding are these packages where, hey, come and shop here, and we'll arrange for you to eat at the restaurant in our store at a reduced rate. Parties. You're having a story about these retail parties where people are showing up to meet people, bring friends, and all that. I think it's across the board. But if you ask me to pick a retailer that is on the lower end, and it's one that you will not find a store anywhere in California, it's Casey's General Stores, which is a southeastern company, but it is a monster stock, and it's one of those kind of things you want to buy in a pullback, and they're clearly having a good run as well.
All right, at this point, Ken Winans, any specific places where you are putting money now and or taking it off the table?
Well, Frank, it's interesting when I look at the market right now, although we're looking at, and I don't think this is a bull market, by the way. I think this is an uptrend in a channel. We'll have to see if we have a breakout in January. Then I might change my tune. But I'm looking particularly at the groups that have been hammered all year. They're healthcare, energy, consumer stocks, and utilities. And I don't think you can have the market and the health of the market gravitate higher, leaving these large swaths of the market behind. So I think that you're going to find a rebalancing of things, but particularly one group, if you are of the opinion that interest rates have hit a top, it's a bit like surfing off the coast. You're looking for that crest in the wave. And one of the areas, you mentioned it earlier, it has to do with real estate. I'm amazed at how the REITs have responded. I'm amazed at how the home builders have been responding, and that is in an inflationary, rising interest rate environment. So one thing I would suggest is take a look at the REITs that are paying high dividends. One in particular, I would look at, I'm shocked to even be saying this. I haven't talked about REITs in a couple of years, but Vornado, which is a very large owner of real estate in the United States, they have a dividend. I think it's 3.5%, 4%. The stock's actually up 20% on the year. But look at some of the home builders that are lagging a bit. I would look at Lennar, and I would look at MDC Holding, symbol MDC and LEN. Again, I find a lot of investors are light on owning real estate in their portfolios, and I think now's the time to put them in your portfolio and to get ready for next year. It's just one of those things you don't want to be short on if you, in fact, have housing take off.
All right, and REIT, of course, stands for Real Estate Investment Trust. For those of you following closely at home, Ken, you're terrific. Thank you very much for that thorough update and assessment here. As always, we do appreciate it. We wish you and everyone there a wonderful holiday season and hope to catch you again next week. That is the one and only Ken Winans joining us live here tonight. President, Winans Investments, market historian, the author of the books Investment Atlas 1 and 2, also Forbes magazine contributor, and, of course, most gratefully, longtime contributor to this program here. Ken Winans, thank you very much for joining us live here tonight.
Thank you, Frank, and have a good evening. Bye-bye.
Thanks very much. Friends, people like you and me have our ears to the ground on all things business. We like to be informed and well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination that they might not have a plan in place if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. The number to call, 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. Mottek On Money continues here on 790 KBC. Good evening. The stock market in rally mode again today, hitting a new high point for the year. The Dow 173 points at 36,578. The S&P 500 of 21 at 4,644. And the NASDAQ gained 101 points at 14,533. The yield on the 10-year note is eased to 4.20%. That's the one that impacts the fixed-rate mortgage rates, and we'll be talking about that coming up here in the next half hour. Taking a look at the cryptos now, we see a Bitcoin pulling back from its high point of the year, up about $300 now at $41,375. Ethereum of 32 at 2202, and Doge is at 9 cents. The price of gold of nearly $3 at $1,995.90 an ounce. Crude oil tumbling down nearly $3 at $68.61 a barrel. At Southern California gas pumps, we're looking at slightly lower prices, $4.82 now, the average price for regular gas in the LA Long Beach area, $5.18 the average price for premium, and diesel now at $5.74 a gallon on average. Taking a look at some of the movers here today, we did see Macy's pull back a bit some more after that big pop on Monday. Stock is target of takeover speculation there. The company's target is takeover speculation, according to the Wall Street Journal. Stock pulling back after ending Monday's session of nearly 20% following a buyout report. Citing people familiar with the situation, the Wall Street Journal reported over the weekend that Ark House Management and Brigade Capital Management submitted a $5.8 billion bid for Macy's shares that they don't already own. We see Oracle shares pulling back more than 12% today after earnings results missed revenue expectations. Ford shares moving nearly 1% higher on reports the company is sharply cutting back on the electric F-150 Lightning pickup truck production. And Choice Hotels International, that stock nearly 2% lower today after the hotel chain's hostile bid for Wyndham Hotels and Resorts in a long-running effort at a tie-up. Looks like they're still trying. Taking a look at what else is happening here, we're watching what's happening in the Middle East, and despite the latest military action involving an attack on a vessel by the Houthis out of Yemen, we are seeing the price of oil pulling back. Of course, we're following that situation very closely. Mottek On Money continues here on 790 KBC. Remember E3 was a pretty big deal, big convention in the heart of downtown Los Angeles, the Electronic Entertainment Expo, E3. Well, the trade group that ran that once blockbuster annual video game conference said it was permanently pulling the plug on E3. According to MarketWatch, E3 was once a yearly highlight for the video game business, especially in the days before social media. Tens of thousands of retailers, creators, industry insiders, and media members gathered in downtown Los Angeles at the convention center as companies showed off new consoles and previewed the games. The event was not open to the general public until 2017. Well, it looks like they've tweeted out that it's time to say goodbye, according to the Entertainment Software Association. And looks like that's the end of it. No more E3. Looks like they had their last event back in 2019, and then the pandemic hit, and looks like some big sponsors pulled out, and it is now over. Game over. Turning now to what's happening with your tax dollars, how they're being spent here in California. It looks like more of that money is going to the so-called train to nowhere. Meanwhile, the effort to repeal the so-called death tax here in California continues. Let's get an update tonight from Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis Radio Show, which is heard Monday nights right here on 790 KBC. Susan, thank you very much for taking the call. Happy holidays to you and everybody there. First of all, on this train to nowhere, how much more money is going to that, and is it finally going someplace?
Oh, Frank, it's going nowhere.
Oh, no.
It's your federal tax dollars this time, and your federal tax dollars are going to the California High-Speed Rail and Brightline West, which is supposedly a private company, but they're getting $3 billion, not in a loan, but in a grant to build that high-speed rail that's been talked about between Rancho Cucamonga and Las Vegas. So it's a lot of federal money, and you would think it could be better spent, but that's where it's going.
All right, so we got two trains going here now. That one, the high-speed rail, last time I looked, the price tag is up to about $128 billion. I think it was originally estimated at $33 billion. At least that's what voters had approved. And now this other high-speed train that's supposed to go to Las Vegas is on track. Before I lose my thought of train, maybe you can explain all of that for us.
Well, the train that voters approved, of course, in California was supposed to go from San Francisco to Los Angeles in 2.5 hours. And now that it's been in the works since 2008, I hope that you weren't in a hurry to get anywhere, because not only is it not going from San Francisco to Los Angeles, it's going now from Madera to Bakersfield, but it isn't anywhere close to even being finished between Madera and Bakersfield. It was not supposed to be built with a tax increase, but it's being built with the so-called cap and trade money, which is essentially a hidden tax on energy. So when you pay your electric bill, when you go and buy a gallon of gasoline or diesel fuel or anything that's moved in a truck that's fueled with diesel, you are paying for the bullet train, because 25% of that tax is going to the bullet train, even though it was not supposed to be built with a tax increase.
All right, and the president announcing that grant essentially, right, when he was in town. Tell us about that announcement and where is that train going to start and end?
The Bright Line train is going to start in Rancho Cucamonga, and it's going to go along the I-15 median to Las Vegas. And while that might be great, it was supposed to be a private project. And it's not a private project. It's going to take $3 billion of your tax dollars, and then they're going to start laying track. And if they get halfway there and they run out of money, guess what? They're going to come back to us for more, because it's not truly a private project, is it? It's really just another government-subsidized rail system.
On the Air Live with Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show here on 790 KBC. What about the repeal of the so-called death tax, which has caused so much heartbreak here in California since it was kicked in? Susan, give us an update on that one.
Well, that is going very well. We are getting a lot of petitions into the Howard Jarvis Taxpayers Association offices in Sacramento. People up and down the state are going to repealthedeathtax.com to get the petition, repealthedeathtax.com. You can print it at
For the real story behind some of wrestling's biggest moments, it's Something to Wrestle with Bruce Pritchard and Conrad Thompson, too.
1995, when WCW announces they're going to be live and head-to-head with Monday Night Raw, feels like this would have been something Vince would have kind of laughed off.
No, we did not like them moving to Monday nights. There were a lot of hotels. They all carried CNN, TBS, and TNT. Vince was convinced that Ted Turner had deviously done this deal to get in the hotels and keep us out.
Something to Wrestle, wherever you listen.
Where leaders go, learning follows. Join an exceptional peer group to sharpen your leadership skills at Harvard Business School Executive Education. Both in-person and virtual options are available. To apply, visit hbs.me/go.
Home on your printer, 1 8.5 by 11 sheet of paper, fill it out, send it in. We need 1 million signatures by January 15th. And then we will be able to get this on the ballot. So don't waste time. While you're with your family, be sure and do that, because we have to fix this tax increase that was slipped in when the voters weren't looking inside Proposition 19, which looked like it was about helping wildfire victims. And it also included this enormous death tax on inherited property. And that just has to change.
Right. So many heartbreaking stories since that kicked in, right? I'm sure you've heard more since we last spoke.
I have. There are people who are losing their property, the people who did not know that they had to do this within 1 year. They had to move into their parents' home within 1 year in order to keep the tax base even partially, and they didn't know, and they missed it by a week, and they are out of luck. They are out of luck. The house gets reassessed to current market value and no way back, unless we pass this Repeal the Death Tax Act, because then it's retroactive, and everybody who got stung by Prop 19 for a parent-child transfer will be able to get their original assessed value reinstated, which is going to help a lot of people, because small businesses and apartment buildings and tenants who are being evicted because the apartment buildings are being sold, when things get reassessed to current market value in California, which is what Prop 19 required, this is a huge, huge tax increase. It can be tens of thousands of dollars every year. And it's just such a sneaky, deceptive thing that this was done. Voters had no idea that this was in there.
And we saw a similar situation where that so-called mansion tax got put on the ballot. And what about that ULA? What's the outlook there?
Well, the outlook there is it is going to the appeals court next. The district, the lower court, the Superior Court in Los Angeles County, rejected the arguments that it's unconstitutional, even though it's unconstitutional, and it also violates city charter. Transfer tax is unrealistic, prohibited by Proposition 13. But what's happened is there have been a lot of exceptions carved into that by the courts, and now this is another one. So this is going to the appellate court, and we'll see what happens there. But this is a transfer tax. They called it a mansion tax, but it's actually on all real estate above a certain price point, $5 million. It's a tax on the sale price, not on the profit, on the sale price, like a sales tax, and it affects commercial real estate, apartment buildings, buildings that are in development that might be mixed use. They might even be affordable housing that someone wants to build and then sell, and it's got this enormous 4% to 5.5% sales tax, essentially, on the price of the real estate. And it's devastating. It's very bad. It's only in the city of Los Angeles which means that sales and development will happen outside the city of Los Angeles because it's a substantial discount to what's within the city boundaries. So obviously it won't raise nearly as much money as it was projected to raise. And it's supposed to fund affordable housing and homeless services and tenant services. But really, it's just an unconstitutional tax, and this is not the way to do it.
And it certainly has had a chilling effect on commercial real estate and the higher end as well. I understand there's some talk about getting something on the ballot to prevent this sort of thing from happening statewide.
Yes, there is. The Taxpayer Protection and Government Accountability Act has already qualified for the November 2024 ballot, and that would restore the two-thirds vote requirement for tax increases, even if they are put on the ballot by a citizens' initiative, as this one was. So that would restore what's in Prop 13. Once again, the courts have carved loopholes into Prop 13. They're always taking a chainsaw to it, and we have to stop this from happening, because between what the courts are doing to Prop 13 and what the legislature is trying to do to Prop 13, it is just cutting down the tree that is sheltering taxpayers. And we have to stop the chainsaw. We have to pass the Taxpayer Protection Act and not pass the things that are attacking Prop 13, which were called ACA 1 and ACA 13 in the legislature. This summer, we'll have proposition numbers. I will be sure to tell you what they are, so you know one from another, because it's going to be very confusing.
Susan, thank you so much for your important work and for watching out for all of us here. All of us taxpayers. Susan SHELLY, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Monday nights right here on 790 KABC. Wish you a wonderful holiday season, Susan, and thanks again for taking the call here tonight.
Thank you, Frank, to you too.
Thanks a lot. Mottek On Money continues here on 790 KABC. Good evening. Turning now to mortgage rates and real estate. Let's bring in an expert here on that. Fred Solomon, president of Solomon Financial Mortgage and Realty, ahead of the Fed meeting tomorrow. We did see the benchmark bond yields pull back, impacting the fixed-rate mortgage rates. The Fed expected to keep its key interest rates where they've been since the summer. That's the one that impacts the adjustable rate mortgages. Fred Solomon, thanks for taking the call here tonight. And how are rates looking, first of all?
You know, Frank, it's been a bit of a pleasant surprise for us in the mortgage industry. You know, we were looking at 8% just 30 days ago, and now we're in the high sixes again. So it's encouraging. And even though inventory continues to remain relatively low, be at least 40% in many areas below what it was before the pandemic started, we're still seeing a lot of multiple offers on properties just because there's more demand than supply still.
On there live with Fred Solomon, president of Solomon Financial Mortgage and Realty. It was pretty scary there when mortgage rates hit a 23-year high not too long ago, as you mentioned, but looks like they're starting to come down here now. What is your outlook for rates as we head into the new year?
Well, that's a great question, and the Fed is going to be talking about that tomorrow. So after they announce what happens with the interest rates, what they then do is they talk about what they feel and what the statements are after the Fed decision. So whatever the Fed says tomorrow, and there's talk on the street right now that they think the Fed is going to start lowering the discount rate. And if that happens, that means adjustable rates will come down. That means credit card interest rates will come down. Home equity lines of credit will come down. SBA loans, Small Business Administration loans, those rates will all drop. So it's encouraging. And, you know, the smart money knows what's going to happen tomorrow. Smart money yields came down today, as you said, on the 10-year Treasury. And the other thing that happens is what's going on with the, stock market. Well, the stock market was up 170 points today. So because the stock market was up 170 points, there's a damn good chance, in my opinion, that they're going to hold rates steady and they're going to talk about lowering interest rates. And if that happens, we'll see lower interest rates for sure. And that will happen as soon as they start speaking tomorrow.
All right. And certainly real estate, an important part of the economy. And we've been seeing sales, real estate sales here in California moving lower recently, according to the latest reading, and down about 12% from a year ago, right? So how is activity at the moment here in your area here?
Well, my office is in Newport Beach, and sales volume is down, but prices are still going up. We're still seeing 10, 15 offers on properties, and these properties are still selling above asking price. Now, real estate's a localized market, so, out in Palm Springs, you may see 1 or 2 offers on a property, but in Orange County, San Diego, and areas like that where I have a lot of friends that are in the business, they're all saying the same thing, multiple offers, and it's just causing these prices to go up. So, yeah, sales volume is down, but so is inventory. Once we start seeing inventory increase and interest rates coming down, then we'll still, I think, there's going to be a breaking point somewhere, but I don't see it happening, especially if these rates keep coming down. And inflation numbers are going to tell us if rates are going to come down or not. And tomorrow morning at 8:30 Eastern time, 5:30 California time is the Producer Price Index report. So that's going to be another indicator of where these interest rates are headed.
And that's the one that measures the inflation number at the wholesale level. So certainly we're watching for that right out of the gate. And then later in the day, we'll be at 11:30 our time. Tomorrow is when the Fed chairman will be speaking. At 11 o'clock, we'll get the actual statement and decision. And, of course, the markets will be riveted to that. So we'll be on it, of course, big time tomorrow evening on this program here. So what about the inflation reading we got today? Is it enough for the Fed, you think, to start trimming? Can we expect lower rates, and when can we expect those lower rates?
So I have a feeling it's going to be based on what comes out of the Fed statement tomorrow after their decision. So to be honest, my guess is as good as yours. And there's a 50-50 chance, whatever you think and I think, there's a 50% chance either one of us are going to be right, because it's either yes or no. So I'm going to be listening closely to what the Fed says tomorrow, and that's going to give us a really good indicator. So I really I don't have my crystal ball handy until I listen to what the Fed says tomorrow, and that's my best answer there.
All right. Any new construction there in the OC? What can we look forward to alleviate this availability issue here?
Buy home builder stock because they're selling out their properties quick, and when you buy their stock and there's not a lot of inventory, people like new homes, and so I'm a buyer of home builder stock right now. I think it's a good investment. But as far as new inventory, new construction, we have land scarcity issues.
Absolutely. Well, Fred, thanks very much for covering all the bases here tonight, and I'll be joining you tomorrow as we watch what's happening with the Federal Reserve decision on interest rates, statement on the economy, and then the full-blown news conference from Fed Chairman Jerome Powell. Fred Solomon, the president of Solomon Financial Mortgage and Realty. Fred, we wish you and everybody there a wonderful holiday season. Thank you very much for taking the call here tonight.
Oh, thank you, Frank. You as well. Appreciate it.
All right. Great to talk to you again, Fred. Thank you very much for joining us here. Coming up next, it's the 790 KBC News Blitz with our legal eagle at Royal Oaks. He'll be coming up next here in just a moment. I'll be back again tomorrow evening in the 5 o'clock hour. In case you missed any of the program tonight, be sure to bring up the Mottek On Money podcast. If you missed any of the recent shows, you can bring up the Mottek On Money podcast at kbc.com. This is Mottek On Money on 790 KBC.
Welcome to Talkville, the ultimate Smallville rewatch podcast. Title Crisis aired March 3rd, 2004. Director Kenneth Biller. He was a weird guy. He was talented, and I liked him, but he was a weird fella.
The production loved him. The cast, Ken, if you're out there, I'm sure we'd get along.
A lot of these people, I don't want to call them pawns, but in a TV production, even directors are a lot of times pawns.
Jump in now or catch up on any of the past seasons of Talkville on YouTube or wherever you listen.